All right, the next one on our list is M99. M99 says prepare journal entries to record these transactions. A, Morel Corporation disposed of 2 computers at the end of their useful lives. The computers had a cost of $4,800 and their accumulated depreciation was $4,800. No residual value was received. There's 2 accounts that we have to get rid of, right? We have to get rid of the asset or the computers, and we have to get rid of accumulated depreciation. Whenever we dispose of an asset, we have to completely get rid of those, right? Well, accumulated depreciation, we increase with a credit, right? That's how it increases. It tells us that we have 4.8, right? So in order to decrease it or to make it 0, excuse me, we have to debit 4.8, and that gives us 0 balance, right? So we're debiting accumulated depreciation 4.8. The other account that we have to get rid of is the asset account itself. You can call this computers, you can call it equipment, it doesn't really matter, right? So we have equipment or an asset or computers, whatever you want to call it. It also had a cost of 4.8, right? It normally has a debit balance, that's how you increase the asset. So we got to get rid of it, we have to credit it, 4.8. That gives us 0 balance here, so we'll credit equipment, or you could credit computers, however you set up your GL. Because you have to remember, it's not that the name of the account is not important. It's simply that the GL package, the general ledger, or the chart of accounts that is set up for each business, right, is always going to vary depending on how much detail that they need or what type of industry or what type of business they are, right? The whole purpose of accounting is to develop an information systems, a way of collecting and gathering data in a way that makes sense, a way that's usable, right? So it's obvious that different companies would have different needs or different uses, right? Internally at least. And then we kind of get that in a generic format that we're learning about in this class for something that's presented to users so that there's a consistency basis, right? But the actual individual account that you see behind the scenes, it really can vary based upon the company. We can call this equipment because we could say that all computers are lumped into equipment, or we can call it individual computer account. Really wouldn't matter. All right, part B. Part B says that assume the same information as A, except that accumulated depreciation updated the date of disposal was $3,600. Okay, so in this part now, we assume that accumulated depreciation is $3,600. We still have to debit it to get rid of it, but we just don't debit as much because there's only $3,600. So we debit 3.6 here. We still have to credit the equipment, get rid of the entire amount. Its cost did not change, so we'll credit equipment or credit computers or whatever account you want to use. 4.8, right? Now our journal entry doesn't balance. 3.6 on this side, 4.8 on this side, right? What's the difference? It doesn't tell us that we receive any cash, so we have to assume that this difference goes to loss on disposal. Now 1.2 and 3.6 balance to our 4.8, right? Now understand that this could have gone a different way. They could have modified the problem to instead say that we received cash, right? And if we received cash, we would have debited the cash and then considered the net book value. The 1.2 is actually that net book value because it's your cost minus your accumulated depreciation rate. We would have considered whether or not the cash was greater than or equal to the net book value. If it was greater than the net book value rate, we would have had a gain. If it was less than the net book value, we would have still had a loss. And if it was equal to, then we would have had a 0, right? A 0, a difference, a 0 loss or a 0 gain, right? So here's the problem M99. Be familiar with how to record gains and losses. Losses are on the debit side, gains are on the credit side. Please send me any questions that you have.